The Central Bank of Nigeria has announced that the Nigerian economy experienced a foreign exchange inflow of about $1.5 billion just 2 days after the Monetary Policy Committee meeting. Now, this influx of funds is seen as a positive sign for the health of the foreign exchange market in Nigeria. The CBN attributes this development to its ongoing monetary policy efforts aimed at stabilizing the foreign exchange market. So to help us understand this better, I have Victor Aluyi, who is the Senior Vice President and Head Investment Sankore Global Investment. Thank you so much for joining us on Business Edge.
Morning. Thanks for having me.
Now, let's start this way. The Naira appreciated in the autonomous foreign exchange market by 1,309 Naira to a dollar, and the CBN claimed its recent policies caused Forex inflow of about $1.5 billion. So can you specify which monetary policy changes it is attributing these to? Are we talking about interest rate adjustments, reserve requirements, or what?
I mean, it's generally been the entire, if you will, monetary policy stance that the CBN has adopted for the better part of this year, really, which we'll basically describe as a hawkish or a tight monetary policy stance, where this year they've basically raised the benchmark rate by about 600 basis points. They've also tightened, the cash reserve ratio from 32.5 to 45%. We've also seen a significant increase in fixed income yields, right? You've seen on the Treasury bill curve, you've seen the short end rates move by over 1,000 basis points. Same thing across the mid and the long point. If you look at the bond curve, you will see that at the short end of the curve, yields have moved by an average of over 600 basis points. At the midpoint of the curve, that's above 400 basis points. And at the long end of the curve, you've seen yields move by about 250 basis points since the beginning of this year. So clearly, all of the very hawkish or tight monetary policy stance that the CBN has pretty much implemented for the better part of this year is what you can basically attribute to, this sort of inflow that the CBN has been talking about.
So let's now look at the areas that these monetary policies are prepared. I'd like you to quickly elaborate on what types of foreign exchange transactions contributed to this inflow. Could it be foreign direct investment, portfolio investment, export earnings? What areas are we looking at?
And these are largely foreign portfolio investments, really, right? So again, the tight monetary policy stance would essentially serves to attract foreign inflows, right? And that's the reason why the central bank has embarked on this stance, if you will. The idea is to create price stability, right? You see inflation at over 30%. We saw the Naira basically weaken very significantly, and to stem that tide, the central bank had to adopt a tight, monetary policy stance, and it is that tight stance that has then led to these inflows. And these inflows are largely, foreign portfolio investments that have just basically come to take advantage, if you will, of the high interest rates that we're seeing, right? So the one-year Treasury bill, for instance, has an effective yield of about 27%. Long-term bonds are now trading around 18%, which, as I highlighted earlier, is a significant push from where we're coming from just at the beginning of this year. So all of these moves is what has basically led to this sort of inflows that have been essentially attracted to the high interest rates that we're seeing right now.
So you just described it as a significant push, but then some financial analysts say that a $1.5 billion inflow is relatively small compared to Nigeria's overall Forex needs. For you, how would you balance it in terms of comparison, what is demanded for, and the volume of inflow that we have?
No, at the end of the day, it's not about the demand and all of that. A 1.5 billion inflow, which is probably over the last couple of weeks or so, recall that you're still probably getting these inflows at the various auctions that happen twice a month. So for me, it's not about whether it's going to meet the demand. It's about the fact that you're seeing significant progress on that front. You might want to recall that throughout last year, we saw a very significant decline or dwindling of foreign portfolio investments. During the early part of the year, you saw some foreign portfolio investments, but as elections came through, that declined very significantly up until towards the end of last year. So this sort of pickup, is significant. It's something to sort of cheer about. So for me, it's not about whether it meets demand or not. It's these are trickles that will continue to contribute to ensure that we do attain price stability over the medium term.
So, Victor, beyond the CBN policies, were there any other recent events or probably economic indicators that might have boosted foreign investor confidence in Nigeria, leading to this inflow? Because some people are asking questions as to what the point of attraction is for the investors and why they are now willing to bring their money in.
Like I said, these are foreign portfolio investments, right? These are not monies that have come to come and build factories or start up any business. They've basically come to take advantage of the high interest rate environment that we have right now. So essentially, all of those inflows that you have seen have basically been down to the monetary policy stance of the central bank that we have seen over the last couple of months. Really is nothing else at this point. Now, as time goes on, as the fiscal situation sort of improves, yes, we'll begin to see those sort of investments, which will then turn as foreign direct investments, which might come into, build factories, take advantage of certain other areas. But as we speak now, what we're seeing are inflows that are essentially looking to take advantage of the high interest rate environment that we've got right now.
So you just mentioned the possibility of the manufacturing sector seeing some sort of investments out of this $1.5 billion. And we also know that the oil and gas industry is another sector that's yearning for investments in that regard. So are there other sectors of the Nigerian economy that are likely to benefit mostly from this influx?
Like I said, these are essentially financial market flows, right? Just to take advantage of the high interest rate environment that we're seeing. This is, again, at its term, this is foreign portfolio investments. They're not foreign direct investments. So again, as things improve, we would then probably start to see FDIs start to flow in. But for now, what we're seeing are foreign portfolio investments.
So I would still want to ask this. Is there a reason to believe that this is a one-time inflow, or are there factors suggesting similar or even greater inflows could occur in the coming months? You are saying that's fine, they're coming in trickles and there's a possibility for growth, but a lot of people will still need assurance on what is to come when we look at it futuristically. So when you look at the crystal ball, what do you see?
Well, I mean, the truth of the matter is that as long as the apex bank stays the course in terms of monetary tightening, I think that we'll continue to see these inflows. The idea, remember that what's really happening is that the central bank is trying to create price stability, with what had happened to FX, with what is happening to inflation. I believe that until we start to see appreciable progress on that front, the CBN will not take its foot off of the pedal of monetary tightening. So once we start to see inflation, some disinflation with the inflation numbers, once we start to see the naira show continued appreciation and a semblance of some sort of stability, that's when I think that the apex bank might start to dial back on its tight monetary policy stance. In the absence of that, I think it will continue to do that, and we'll continue to see those flows come through, barring any unforeseen circumstances, really.
Okay, so still talking about monetary tightening, we've seen some other African countries that have tried as much as possible to rein in inflation by hiking the interest rates. And we've got some other countries, African countries, have actually stayed pegged the interest rates. And a lot of people are wondering if the NPC of the Central Bank of Nigeria would increase the interest rates as they have done of late to about 24.75%, I want to believe. So do you think that should continue even as it continues to deal with inflationary pressures?
I mean, with monetary policy, there's usually a lag effect, right? So you've done 600 basis points in about a month or so. I think that it will be important for the committee to hold off a bit and pretty much assess the impact of these hikes or this tightening, on the overall economy, especially when it comes to price stability. See what impact it is having on inflation, see what impact it is having on the currency, and then from there on out, be able to determine what it would do going forward. I think, that the meeting in May, I don't think that there will be a further hike in the benchmark rate. I think it will provide an opportunity for the committee to assess what it has done so far. I also think that we are likely to start to see some disinflation right before that meeting. That will certainly provide some impetus to the committee to want to hold off and see what the impact of its monetary policy stance has been before it then goes ahead to make an assessment as to whether it would want to hike further or hold off on further hikes, really.
So what about Nigeria's balance of payments and trade balance with other countries? Will it also improve the values?
I mean, that's a separate thing from monetary policy at the end of the day. That's largely a trade and mostly fiscal policy stuff, right? we expect to see improvements there basically on the back of factors, right? We're seeing crude oil production improve. We're also seeing crude oil prices essentially remain on the ascendancy. We're seeing cocoa prices really go through the roof. Nigeria is one of the 5% globally, so that should also help with our balance of payment situation, which obviously ultimately then helps with price stability for the country. So with the monetary policy situation, I don't think that there will be any significant or major impact when it comes to balance of payment. These are other factors that I think would lead to improvements in balance of payment. Like I highlighted, crude oil production and prices, and also the cocoa situation should be very helpful as well.
All right, so we've seen how global shocks have actually affected several countries. And a couple of people are actually wondering if these policies of the Central Bank of Nigeria will be able to insulate Nigeria's economy from these shocks, because we don't know what might happen, but then we still see all these activities at the global stage having some sort of negative effects on the pricing and, of course, Nigeria's economy. Do you think that we should be worried about that?
The truth of the matter is that with global shocks, you never know what it is. You never know when it's going to happen, right? So it really remains to be seen what global shock that would be and what impact it would be. It'd be difficult to sit here and say, oh, there is this sort of global shock that may come. The truth of the matter is that Nigeria's economy is essentially on the mend. So it would not be it would not be a good thing to have a global shock at this time, because we are actually, carrying out policies that are necessary but painful to essentially turn the ship around, So I don't know what global shock might come, but I think that with the policies that we're seeing and the policies that are being implemented, with the cadence at which they are being implemented, I think that we're essentially on the right path.
So it seems all good. We're seeing investment inflows coming in, and a lot of people are actually optimistic about what it might bring. But then might not just be all good if we have to look at it critically. Are there any potential risks associated with a sudden increase in foreign exchange inflows? And if those situations come into play, how do you think that can be mitigated?
I mean, the major risk with this sort of foreign portfolio investment flows are they're essentially monies that you would term as hot monies, right? They're basically here to get the high interest rates. And once these high interest rates start to recede, these monies might want to find their way back out of the country. And at that point in time, you must have been able to build your reserves to a level where you have significant buffers to take that hit, such that it doesn't then create any problems further down the line. For me, that's basically the only risk that I see, further down the line, where there's a reversal of flows once this hawkish monetary policy stance basically comes to an end. That's the only risk that I see. And if we're able to consolidate and build our reserves with increased production, taking advantage of the high crude oil prices we're seeing, also the cocoa situation that I mentioned earlier, I think that it would help a great deal for us to have been able to build reserves to a point where once we start to see the reversal of flows, it will not have a major impact on the economy. But I think that remains a risk that has to be considered.
So looking at Nigeria's economy, at what point would you say the reserves should be built to give it that bit of formidity when you compare it with other economies on the continent?
Well, I mean, at the end of the day, you need to build reserves that can cover between 18 to 24 months of imports. Right now, we're sitting at reserves of about 34 billion, which probably covers around maybe 6 to 7 months thereabouts. So clearly, there's still a lot of work that needs to be done to continue to build the reserves to ensure that we have, significant buffers that can help us tide over any unwarranted or unwanted situations, really.
All right. Victor Aluyi, Senior Vice President and Head Investment, Sankore Global Investment. Thank you so much for being on Business Edge.
Thanks for having me.
Of course, you're watching Business Edge on New Central Television. We'll now go on a short break. When we return, we'll bring you international business stories. Don't go away. And that's the end of today's edition of Business Edge. You can visit our social media handles at News Central TV and also visit our website www.newscentral.africa and you can download our mobile app on App Store and Play Store. I'm Lekan Onabanjo. Enjoy the rest of your day.